Nordstrom and Ross stores just came out with earnings. Nordstrom shares are in the red, down, let's see, about 9% right now. For more, let's bring in CFRA's Zachary Warring. Zachary, let's start with the one that's moving the most. That's Nordstrom. What's to note here? I mean, inventory levels, we're concerned about the overall state of the consumer. What is it that investors need to be concerned about the most with this downward move?
Yeah, thanks for having me. So, with Nordstrom, it looks like it's weak guidance, honestly. They've had a 60% run in just a few months here. So shares are taking a breather. And we think, valuation's trading at roughly 10 times if they make $2 a share next year. And we think that's fair. So, this is just a breather after a 60% run, probably.
Well, speaking of a breather of a different sort, Ross Stores is just off fractionally, and given the run that it's had along with a lot of other discount retailers, maybe that's not such a bad thing. How do you feel about Ross?
Yeah, so it was a great quarter from Ross. They announced another buyback, so $2 billion. It's pretty much in line with what they've been doing, almost $1 billion a year, and that's a 2-year program. Margins are up. They look a little better because of the 53rd week that they had this fiscal year. But yeah, they say they state lower freight costs and then higher sales. So Ross is a steady grower. They're a consistent grower. They deserve a multiple. We think between 20 and 25, and it's towards the high end of that. So it's another story of you're kind of looking at a breather here.
It's interesting, whether it's Ross Stores, whether it's the rack business at Nordstrom, which grew double-digit percentages, whether it's Target. Yes, I know we saw declining sales, but we saw strengthening margins there. You don't cover that name. The read-through here is that consumers are continuing to feel stretched. Yes, maybe the pace of inflation is starting to slow. It's starting to come down, but we're still at higher levels for a number of key areas, including, for example, housing, which Ross Stores called out in its release today, than we were just a couple of years ago. Does this mean that off-price retailers and anybody who's exposed to that are going to continue to be the winners no matter what? Like, if you had to just buy one stock, would it be one of those?
Right here, probably not, just because of valuation. They're trading at basically their high over a 10-year period, if you look outside of, the pandemic. So probably not one of those two, even though I think they'll continue to benefit as long as the economy remains stable. If you're looking in the department store, since we're on the Nordstrom train here, we like Dillard's. So Dillard's buys back a significant amount of shares. They've kind of given up on growing, but they operate really well. They've been able to maintain margins at about 15%, even after the last few years. So we really like Dillard's. We think they continue to buy back shares, and they're gonna, their shares will appreciate from here.